Good morning and happy day to you. And we've all heard the song back in, I think it was the 80s or maybe 90s, where it's like, I want money, lots and lots of money. But the problem is, if you have a lot of money and you earned a lot of money in any given year, and you're going to take Medicare 2 years later, that I got a lot of money income issue can come back and bite you, because the amount of money you made 2 years ago is going to determine the amount you pay for Medicare Part B. So this year, we had a certain threshold and a level for those. Next year, it's going to change. And I want to tell you what those thresholds are, what it looks like, how much. But here's the big question. Rayna, what can I do about this? Thanks for the information, but what can I do? Well, take inventory of who you are and where you are in your life. For example, if you're 60 years old, there's not a ton you can do today, because it doesn't matter. 2 years from now, you're only going to be 62 and may not have Medicare unless there's a disability. Remember, Social Security disability approval will merit you Medicare 2 years after the approval from Social Security disability. So it might be something you want to be aware of. But here's the deal. If you're 63-ish, late 62, early 63, you are then 2 years away from Medicare. And you have a lot that you can do this year to determine what you will or won't make. Now, you can't do anything about your salary, but you can determine how much you want to take out of things like TSB, 401k, or either Roth conversions. Because even next year for my federal employees, yay, TSB is offering an internal Roth conversion from traditional to Roth. But you get taxed on that when you do the conversion, which means it's extra income. So again, you cannot do anything about how much income you make today, but you can decide whether or not you're going to grab extra cash from TSB, and if you are going to, how much. Well, let's see what these thresholds are and what your options will be. So if you are just an individual last year and you made $109,000 of income or less, then this year, 2026, this upcoming year, you will pay the standard rate, which is $206 a month, $206.50. No surcharge, no extra. Now, if you're married, you can make double that amount, $218. So, well, that's nice. It's a nice doubler. Good thing to remember. It's just double the amount. So if you're under that threshold between you and your honey bunches, then the both of you, if you're both eligible, will only pay the regular $206. So if you're saying, yeah, Rayna, but what does it have to do with me taking money out of TSB? Well, that is where you can decide if you want to grab a big chunk. Because what if your income between the two of you was $190,000? Well, then you've got that amount of window between $190 and $218 that you can go ahead and take out. What is it? $28,000 you could take out of TSB and still only pay the $206 a month. Now, obviously, that's this year's, next year's threshold from last year. And then the year after that, we'll have a different threshold for this year. In comparison, last year's threshold for a joint income was $216. Individuals, $106. So you see the trend. It's going to increase a little bit as time goes by. Again, why do we care? Because if you bust and then a couple of years later you have to pay more, you may be irritated yourself, but you won't know why it happened. If this year you can sort of look around and say, yeah, I have this much room. I was going to grab $50,000 from TSB, but because of this year's threshold, I really don't want to go over that amount. Let's keep it under this threshold. That way we don't hurt ourselves 2 years later, whether that's a withdrawal, Roth contribution, or correction, Roth conversion, something like that. So these are the things you want to be aware of. Now, again, there's a host of thresholds. So maybe you can't help it and you're already making 150 grand, or between the two of you, you're already at $300,000. Well, your next threshold, of course, would be $342. So if you're making $300,000 between you and your spouse, then you've got a $42,000 window where if you wanted to grab more, convert, whatever, before you hit that next threshold and pay $536 a month for Part B. Now, remember, there's plans all over town that once you have Medicare Part B, we can have a talk that can potentially reduce the cost of Medicare Part B, and we should definitely talk about that. But this is a prevention talk. What do they say? An ounce of prevention is worth a pound of cure. And I would much rather have a little bit of planning so we don't have to do a lot of correction, because sometimes you can't do anything about the correction. You just got to you already made the bed, you got to lie in it. So this goal is so you kind of start looking into the future at the end of the year. Why the end of the year? Because that's when you know exactly how much you've made come, say, October, November, already this year. So you can decide, okay, am I going to grab more? If so, what are my thresholds? Threshold number 1, tax brackets. Threshold number 2, IRMAA, that's what they call this, the income-related monthly adjustment amount for Medicare recipients. So if you're 63 or over and you're 2 years away, or you're already within Medicare beneficiary eligibility, time to start thinking about it and reach out if you need help, because that's what I'm here for. I have myself and a few other Medicare specialists on my team. We can help you make sense of your options, the income levels, how to do Roth conversions, and Medicare prep. We look forward to talking with you soon. We just want to do a little bit of planning so you can have a great